All right, Mark, you are live.
Okay, welcome guys. Welcome to the webinar. I'll be starting in a minute or so. Give everybody a chance to all right, we've got almost 100 people in here. Fantastic. Hi, Ronnie. How are you doing? Warren from London. Vincent, how you guys doing? Crazy trading day. Alan, Brad. All right. Hey, Henry, how you doing? Grace, Vera. Got a lot of people checking in here, so welcome everybody. I'll give this another minute and then we can just start. I know what everyone wants to talk about, so we'll start there. All right, so let's begin. So welcome to the webinar. Welcome to the last of my 4-day live trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. My name again is Mark Shawson, the pattern trader. Kind of show you what I was up to today. This is my FX account. I'm short gold from 17.99 and then 17.77, closed at 17.75. Making a few dollars there. And then I'm also short the British pound versus Japanese yen. We talked about both of those trades yesterday. I just, hang on to these things. If they continue to work for me, I just let them continue. Unfortunately, I had a lot of volatility this week in Tesla. I was short Tesla. I was warning my, our members like 2 days ago. I said these short covering rallies can be murder. And, I kind of got hooked out, by my own advice. The Tesla went down to 950 Monday morning, and then it went to about 1,070 yesterday. So I had a $120 kind of short covering rally. And, I kind of, had to capitulate. I had a lot of profits. I kind of gave in. But then when it gapped down today, to me, the patterns, I always say, trust the pattern. So if something starts moving in accordance with what the pattern is doing, then I'm just going to get back in sync. So I didn't play it well, but I got back in a bunch of times, made a lot of money today. And then I just went, home with these positions on the close. I was short 750 shares in this account. And then I'm also long 250 of the triple Q put options. These are put options. It's a bet on the downside in the NASDAQ. So tomorrow we've got a CPI report. I think the triple Qs closed badly. They're right up against resistance. And I took a bet that tomorrow will come in pretty bad, that the market should go down. Now, the problem is these expire tomorrow. So this is just a huge bet, to bet 40 grand that literally could blow up in my face tomorrow. If this market goes up at all, I'll lose all of this money. And I also did the same bet in this account. I bought 200 of the triple Qs of the 392 and a halves. And so I've got a huge bet on the market going lower tomorrow. And then also in this account, I'm short 2,500 shares of Tesla. Got about $40,000 worth of profit in this position. And then I also took a bet. Also, this expires tomorrow on the 1,000 puts. Currently it's trading right around 1,000 in the aftermarket right now. Tesla dropped about $70 today. We'll talk about that. And then I also went home with some puts in MARA. This is Marathon. This is a kind of a proxy on the crypto space. Cryptos are crashing. This looks like it's going to crash. So I bought some put options and they were up pretty big today. So that's kind of what I'm up to. I've been looking at Tesla all week, and let's kind of see what's been going on there. So where is this thing? There it is. So I would say the market's like a magician, right? It is always trying to take your eye off things, distract you with the left hand while it's pulling the rabbit out of the hat with the right hand. And what I mean is that, to my mind, and I talked about this on Monday, I believe that Tesla has put in a meaningful top. Could be an all-time top in the form of this triple top. So you recently had this double top where you made a high, backed off, retested the high, and when you come through the neckline, you effectively confirm that top. Now, what often happens is markets will, people get all excited, they'll rush through the neckline, and then you'll get a retest of the neckline. And if then the market comes back down and takes out that prior low, then that will confirm that this is really good and this pattern is real and it's likely to continue. So any breach of the 950 low that we saw on Monday is likely to see this thing go lower and perhaps much lower. So I talked about this in terms of a parabolic implosion, where this whole market has been a huge parabola. And when it unwinds, it could just unwind in a huge way. And so you can see that in the last couple of days, we formed effectively this little double top here, and then we came off, we took out the lows, and now it feels like we are going to go back, but not without huge volatility. If you play the stock, you need to put a pretty wide stop. But I do think that this thing, again, this is the neckline right here of this whole thing. So if we basically come back here, which is around the 975, that will effectively turn this down. And then certainly if we take out 950, this will confirm that this is a top. And so what I look for in the markets is a pattern that tells us what's going on. And then in between, there can be all kinds of gyrations. This week there were all kinds of up moves in Upstart and Roku and DocuSign and all of these things. And, I said, for Monday, don't be kind of seduced or hypnotized. There are going to be these up moves where you just want to join the momentum. You want to join the trade. When you listen to all the commentary that day, it seems like everything is going higher and you just want to get in sync with that. But then, you'll get killed. So to my mind, you got to keep an eye on the pattern. And there are, whole bunches of time where this thing could be going higher. But just like here, where it went higher, it got belted by virtue of the pattern. So I always look what we call the governing pattern. And I do believe that, we put in a governing price pattern. What I mean by a governing price pattern is that this pattern is going to govern or dictate the trajectory of this thing going forward. Now, it's not going to go in a straight line, but I'll know now that on every bounce that I'll want to get short in Tesla. If we start confirming this thing and start, making this a governing price pattern. I showed you that, head and shoulders in QuantumScape back in December, and then it continued to kind of go up and down and up and down. Every time it went higher, I just shorted into it because I knew that we had a governing price pattern that told me what to do. So effectively, I let the market. So this is what Tesla looks like. It's a huge parabolic uptrend. And typically, the more of these balloons get inflated, the quicker they come down, the harder they fall. So to my mind, there is a double top up here on the weekly chart. You can see that they're also married by these key reversals. Made a new high, close on the low, made a new high, close on the low. And, we'll see how we close for the week tomorrow, but it certainly looks like we went higher and now we're starting to come back down. So this will put in a top on the weekly also. Now, sometimes it just can take time where we see the top, but there's just all kinds of thrashing before it goes down. But you shouldn't lose sight of what the big picture is telling you. And so we have, an uptrend line that has been in force and effect. You can see how beautifully these things adhere to these lines. And so this is what I would be looking out for. Around $800, you're likely to get some kind of bounce. Actually, the first bounce is probably from the breakout area. So this broke out around the $900 area. And so this would be the first meaningful test that I would expect where, we hit this, usually where it breaks out, you might get a bounce. But again, that's going to be a dead cat bounce where it's likely to go back in the direction of the trend. And then the next big one is 800. And then if we take that out, you could literally see something like this in pretty short order. So I know it sounds crazy, but you have to be objective and look at what the charts are telling you. As I said, the whole week, you had all kinds of up moves, counter trend moves in all kinds of stocks. So this is really slow. So I'm just going to show you a bunch of examples on my broker platform here. So this is Tesla. You can see, sometimes I like looking at different charts. It just gives me a different feel, a different visual. And on this I can see this, perhaps even more clearly, where I can kind of see that this is in a descending triangle. And what this suggests is that, you could have a bunch of bounces here before it, it clocks underneath there. But you can see that you've got these lower highs against this common low. And so you set up this descending triangle. And, so the next bounce is probably going to be at this 940 area that it hit earlier in the week. But it just feels like this looks very heavy, that this is a price pattern that is very bearish that's emerging and is going to put a lot of pressure on prices. And so all this week, we basically had this up move in the NASDAQ and the thing. And so you see all kinds of things like Roku, where I've been very bearish Roku. Based on the price patterns. Same thing, rinse and repeat. Here's a head and shoulders with what we call a drooping neckline because the right shoulder sits below the left. And so it creates this down sloping neckline. And so that implies that that move is going to be very much to the downside and very explosive. And that's exactly what we saw. And then we caught a bit of a bounce, went up, huge yesterday on some news. They did some merger. So, you're listening to the news, you're hearing some exciting merger with some other company. And then you wonder what happened when this thing's down, $30 again today, because this is a downtrend. And so now really what I'm looking to do is rejoin the trend. And I'm always looking for that signal that puts me in the direction of the trend. So here you have a monster key reversal where today you made a new high and by the end of the day you closed on the very low. So since this is a large range day, I anticipate that, we'll get somewhere back in here, but I would look to get short Roku. I do not think that you will perhaps ever see that high again. So the market, these reversals, the market tells you where your risk is. Right? Because these guys try to push it up here. And you can see by the end, the sellers were in control. So now you can understand the dimensions of a trade, where you can understand a risk reward. And to my mind, trading is all about understanding levels of risk. Where this is going to go, how it's going to get there is the unknown, right? This is going to go lower. And so all we want to do is figure out, okay, how do we hop aboard this trend and also understand where our risk is? So you could put a sell stop here. You could put your stop loss there. That's your risk, and that's potentially your reward. And this is in ROKU. And there's all kinds. So since February, I've been telling our members really the 4 horsemen of the bear market, to get short Zoom. You see this giant head and shoulders here. The double top, head and shoulders. And so you can see this huge bear pattern. So, on earnings, this thing cracked $50 lower. I made $50 in 5 minutes going short Zoom just before the earnings based on this double top. And if you look at the weekly, it's been even more bearish. And all the way down here is another top. And so this thing is just making its way lower. Zoom is dropped from $588 to $188. And I think it'll get cut in half from here. I think you'll see this stock under $100. Now today, you got another signal, made a new high, close on the low. So you want to know how to get, now you see a trend, a downtrend, you want to know how to get involved. You just put a sell stop there, you put your stop loss here, and you get back on the horse. So you can see the last 3-4 days in Zoom, we caught a bid and we're going higher. And people say, well, should I short Zoom? Should I short Zoom? Wait until the market tells you. So, for the last 3 days, it went higher and higher. I didn't know when it was going to stop, but today it told me that now it stopped, and it showed me, okay, how I can get back in this trade. So the 4 trades that I've been saying since February to our members, since $500 in Zoom and $200 in Beyond Meat and $170 in Peloton, is I've been telling our members to short these things. This is Beyond Meat, BYND. This is cracked from $200 to $70. So here you see another head and shoulders. So that pattern tells us, again, so the right shoulder sitting on the left, you got this sloping down. So it tells us that not only is this bearish, it's going to go very quickly. And that's exactly what happened. And so you can see today we had another reversal, made a new high, close on the low. So basically now you can hop back on this train. Put your sell stop there, put your stop loss there, and get back on this bus. Peloton, an absolute disaster. I was saying since February, since this thing was $170, that this thing was going to go much, much lower. So you can see all the way back on the weekly in Peloton, we were at $170 and now we're at 40. But to me, again, if you just look at the patterns, here's your head and shoulders. Looks just like a man or woman's left shoulder, right shoulder. And then you had a rounding top. And then once it cracked this 95, you just kiss it goodbye. And that's exactly what happened. So once you understand, the dynamics of price action, this is what I look for in my trading, these monster moves. And they're there to be had all over the place. So you can see Tesla is trading about unchanged right now. It went under 1,000 just a moment ago and is just treading water around the unchanged. And so the thing is, the market will give you 1,000 head fakes to duke you out. And, it got me out today in Tesla too. I mean, I was so, I had such conviction about this thing. And then, I had a huge position on. And so when you see moves like this, and then you hear on the news, they were selling some clothing at the time or something like that. And you're thinking, well, what's going on here and whatever. But this is telling you, this pattern right back here is telling you that all of these rallies needed to be shorted. And I do think it's going to be the same in Tesla, where we will see a clear governing pattern, perhaps not so clear yet on the weekly, but I do think that it's starting to emerge where this is starting to look very much like a double top. So now, if we start coming down here, every bounce needs to be shorted, because the pattern tells us what to do. And there were all kinds of patterns going up. This was effectively an ascending triangle that broke out right here. So right here where this thing started to break out, this is where you needed to get long. So the market tells you through all kinds of patterns and price action how to take advantage of monster moves in the markets, even short-term moves. Here was, a mini double top, head and shoulders. You could have got short at 950 and this thing went all the way to 550. So there are all kinds of moves along the way where I look at a combination of patterns and price action to extract huge moves in the market. Now today I'm also short this little stock called Marathon. It's a proxy on the cryptos. The cryptos look like they're about to crash also. If you're long those, I'd be careful. This is really slow. So this is something called Marathon, patent, or what have you. It's, again, just a proxy on the crypto space. I don't really care. A chart's a chart to me. So what I see is a combination double top, head and shoulders. It looks just like a man and woman's left shoulder. The peak is the head, and that's the right shoulder. And we crossed here. What I like about this is that, people got very excited. Then it retested that neckline. And now if it fails, then it'll just crash very, very quickly. And so I bought some put options in the expectation that we'll see some follow through very quickly. And this is what we're looking at in MARA. The same thing in a thing called Riot. I think I put this up yesterday. I said both of these things look like they're ready to roll. And you can see they both had huge downdrafts today. So this thing, unfortunately, it's only $26. So when we short something, it can only go to zero. So, but, I think you can take $5, $8 out of this thing pretty easily, which is, 20, 30% return. And if you're leveraged, it can be a lot more. But the whole thing is, again, what I'm really trying to show you is it doesn't matter what this is. It's how to read the price, what the price is telling you. So this is this descending channel. This kind of looks like what Tesla's doing, bouncing in this descending triangle, if you will. And you can see the more times something, tests this area, the next time it's not going to give you a handshake and give you a bounce. It's going to go right through. So this thing looks like it's ready to go. You can see there's a beautiful double top here. And then also, once I see a pattern, I also dig in and look at the price action. Made a new high, close at the low, made a new high, close at the low. So these guys actually point in the direction that that market is going to go. And it just takes, some time. And this is what is the distraction. People watching this every minute of every day, wanting some instant gratification, and it just takes time. But this too has challenged this neckline, and looks like it's ready to roll over. And so, once it gets back to 25, this thing looks like it's just going to crash. It could, crash 50% from here very quickly. So this looks very fertile for a short trade. And again, it's really a proxy on the crypto space. So not really saying great things about what's happening in cryptos. This is another proxy on cryptos, which is Coinbase, the broker platform. And really, Coinbase told you that it was over before it started. I was actually surprised to see the level of rally that came back. But, right here, when we saw this day, this was the first day of the IPO, where all the insiders were obviously getting out, and now they were leaving, the paper to the retail. So you can see it made a new high, and by the end of the day, it closed on the low. But it's the size of that bar told me that that was likely to be the all-time high that you'll ever see on Coinbase. I don't think you'll ever see that taken out. I was actually pretty surprised to see it get as far as it did. But now, it's put on a bear pattern here. You can see this double top right here, this head and shoulders. It also had a relief rally, and now it looks like it's coming back down, and it looks like it's over. This thing is, going to go to much lower levels. So the all-time low is 210, and I think it's just a matter of time before we take that out. So Natalia says about Mara, don't you think that it needs additional confirmation? Mara? No, not really. I'm just looking at the pattern, and then I saw that it retested the neckline, and now it's heading back down. So really, again, what directs me which side, how I should be faced is the pattern. And this is the double top here, and then the head and shoulder, and then basically you confirm this. So by crashing through this neckline, you effectively confirmed this bear price pattern. And all you did was retest it. And I do believe you're going to go back down. So you can see that we kind of had a mini double top here in the last 2 days. So you can see we had like a top, and then once it cracked this low today, I knew that, I needed to get short. And so, what it does in here, how it goes, how it gets there, that part I don't know. But I can, construct a risk reward. So when I bought my puts here, this was effectively my risk. So I have a very small risk for, a very good probability. And this is what I try and do, find areas of charts where I can understand a risk reward relationship. The problem with this week is that you've had these huge ranges. And so I said, you need to just wait for everything to calm down, and then wait for a day like this where now it gives us all the sell signals, how to jump back in this pool. So, Zoom was, hit a bottom. I didn't know how much off the bottom it was going to go. I didn't know what the behavior was, how long that uptrend would be. Sometimes you can see it hits a bottom and goes, sideways for a week or two. And then I just wait for that day where you see that makes a new high, close on the low, and you get back on the horse again. So the last 4 days it went sideways. I didn't know how much it was going to continue. And today, I would say you have to wait. Don't chase the market. Let it come to you. So, I could see that it made a bottom here, made a new low, closed at the high, and it was already very stretched to the downside. So it made sense that it just needed some relief rally. And, I didn't know how long that rally was going to, go on for, but I think that it's basically done. You saw it today, we made a new high, close on the low. So it's just, the problem is you're pretty bunched up in here. I don't know. What I like to do is see spacing. So once something's made a low, I like to see it build away, create some space, so then it can go down again. But, this could just, just, collapse tomorrow. We may get a negative CPI, which, I'm expecting. And, I bought the put options that expire tomorrow. So I'm either going to be right or, wrong. But really, I saw this key reversal here right in the neighborhood of this resistance. This isn't perfect. I mean, this is not really a bear chart. It's very noisy. This could very well just open up and go higher. I'm just looking at this reversal here. We kind of got back into, this resistance level. And then today we have this key reversal, and I'm just looking for some follow through in the morning. And, hopefully it's big. I also see that this, the NASDAQ now could go much higher before it hits here, but I feel that we have to come back and retest this area here. So you can see we've been hugging this uptrend line, and I do feel that, we need to come back and retest it, which is not too far away. But I think that, we had a reversal a couple of weeks ago, and so it was very unlikely that this was going to continue through there. But we'll see tomorrow. I took a big bet, going short here, and then, I'm hoping tomorrow we get some. And believe me, if I get some mileage on those put options, I'm not going to stick around for too long. But it could be robust. Deborah says, are there any more risk reward trades like BYND? That was awesome. So Deborah, I think you can get back on the BYND horse again. I think that just like Roku and Zoom and all of these things, I said, wait. Also with, BYND, just wait for this thing to exhaust itself and show you when it was done going down. But so this is, anybody who's known me, have been on any of my webinars, I've been, crying from the foothills that this was one of the biggest and best bear price patterns I'd ever seen. I've just made a lot of money on this chart. Right here was a head and shoulders. Here was a double top. Here was a head and shoulders. And then here was the neckline. So once it basically penetrated the neckline at 110, there was no surprise to me that it, went to 60 thereafter. So now you're just mucking around here. And I believe that you're going to go under this IPO price. I think you will be into a $40 stock. And I was saying that at 200. So Deborah, I think you can, this has offered you another spot to get in. So, there's kind of a cadence the way, Beyond Meat, goes. It kind of makes a low, new low, close on the high, goes higher, makes a new low, close on the high, goes higher, makes a new low, close, goes higher, makes a new low, close on the high, makes a new low, close on the high, makes a new close on the high, so there's this stair step at every time if you'd shorted every one of those rallies. And I think this is another one where it'll take you to, so this is like a very illuminated staircase, all the way down, stairway to heaven if you're short. And I do think that, today's, rejection at 75 is probably likely to be the high. So, at some point, tomorrow you can get some price into here. I would, take that short. It's just sometimes, it gets a little crowded in here. I always say that trades need to build a little space. So you can see that these built away. They built away from that downtrend so that they could fall again. Then they fell. Then they needed to build away again. Then they fell. And so I'm just not sure if, we may need a couple more days, but, you can always be short Beyond Meat. There's no risk this thing's going to go higher, and this will be a $50 stock or a $40 stock at some point. Dara says, can you talk about BABA? I was in this. I bought some call options yesterday. They initially went higher today. I should have got out. I was making some money, and then it turned around on me, and I just got out. It didn't do what I thought it was going to do, and so I'm out. I thought there was a bit of a potential for this to be kind of a trap play. But now it looks like it's poised to go back in the trend again. So, this is a pretty profound downtrend. And so you're always looking for, ways to get. So you can see, and this may look just like it does right here. We have this double top and then made a new high, close on the low, made a new high, close on the low. And so you did that also right here. You have this little mini double top, made a new high, close on the low, made a new high, close on the low. And so it looks like this thing is just going to go back in the direction of the trend. I had I was looking at some other things. I thought, well, maybe we close on the high. And so when I look at certain things, when I look at charts, I then set up an expectation, right? Where, I see the double top. And now my expectation is that this, should go lower. And if price confirms it, which it obviously did, then I know I'm on the right track. So I'm always looking for, this setup to translate. So my expectation or my, I was thinking if this is a bear trap and that was a reversal today, we should have, we could have seen something like that. Or maybe I was even, hoping that we would gap higher. If I was right, I was thinking that maybe it gaps higher and then it does something like that if you have that kind of play. But you can see that the price isn't confirming that kind of hypothesis. So I did that kind of trap play in Beyond Meat in May. And so you want to see that prices are actually confirming what you're looking at. And so when they don't, I just get the puck out, right? I'm not waiting around. I was wrong. And so this was back in May in BYND. And this is why you kind of always have to be on alert. Charts throw you all kinds of looks. And that's the beauty. So here's the double top, which to my mind, was set in motion this huge downtrend. And you can't see it on the weekly, but there was a huge neckline under this 113 going back many years. So in my mind, when you breached that neckline, it was pretty mature that this was my expectation, that this is what this market should have done, right? But what I think doesn't matter. It only matters what the market is saying to you. And so when the market kind of did this U-turn, all kinds of bells and whistles went off my head that this is not what this should be doing. And if it's not going to do that, it's going to do the other thing. So if it's not going to go down, it's going to go up. And so I was on red alert. There was actually a very funky little double bottom right there. And then this thing was like pushing on a string every day, it just couldn't go lower. So it's like that, that beach ball, where you put your hand on a beach ball and you push it further and further underwater. And then, you let your hand off. What happens? It just explodes. And that's what this felt like. This felt like it was just every day they were trying to push it lower, push it lower, push it lower. And then it started to pop up. So right here, I just used the market. So there was a little narrow inside day bar there. And I go, you know what? This thing shouldn't be doing this. This thing shouldn't be popping up this neckline if it's bearish. So I said, you know what? There's just going to be a short squeeze here. Where anybody who got short there is just going to have their, what squeezed. And so I basically, on the next day, before the market even opened, and you can't really, I started buying the stock in the pre-market under 120. It did end up opening higher. And then I also bought the 125 and 126 call options for about $1.50. And in 3 days, they went to, the $1.50 call options went to $23. And I made 7 figures on that trade. And it was a trade that was counter to what I thought was going to happen. And, that this was a very bear, but it was just this was a bear trap. And so the market will set those layers for you. And you got to be aware of that. So here again is your head and shoulders, which then set in motion this whole thing. But now I think the game is up. You're not going to see any of those rallies, and this thing is going to go back in the direction of the trend. And this will be a $40 stock at some point. So Neil says, when do you buy options? So I buy options when I think there's going to be an explosive move. So when this didn't do what I thought it was going to do, I thought it was going to do that other thing very quickly, where, it basically, this is a trap where it gets, and this is what I was thinking when I was talking about BABA, that maybe there was a trap where it made a new low and then, was going to uncork. And so if I was right, this is what I was looking for today in BABA, where you gap and you go. There's no ifs, ands, or buts. So I look for the market to confirm what I'm looking at. And if it doesn't, if it's doing something else, then I'm out, right? So I have a certain scenario in my mind. And sometimes you get these busted patterns where, you see, or you think you see a double top, and it sneaks a little bit, underneath the neckline. Everybody's getting all, excited. And then all of a sudden it's up here and I'm going, wait a minute. If it's up here, then something's wrong. Then this is not a top anymore. And then I will just get long because it's not doing what it should be doing. So the market dances around prices, it dances around patterns, and you have to be somewhat fluid and dynamic. But I'm getting too much in the weeds. Basically, when you see, this is a double top right here. And you can have the tops in, obviously one high is lower than the other, but it doesn't matter. When you look back, this is, so when you're here, you can pretty much see that, hey, this was an M top. This was governing the trajectory of prices. And this is what I'm saying about Tesla, right? Once we see this is going to govern or dictate prices into the future. Now, there are going to be all kinds of times where, the market goes higher. But this is telling you, on balance, that's the long-term deal. And so, it's kind of like trading for dummies. I look for patterns that tell me, okay, what is this thing doing? And then sometimes, that, if it, is put on a double bottom, then it goes back up. If this thing comes down, I'm not scared of looking to short it. I'm looking to buy that because this is telling me. So Neil, so I buy options, and so right here, I never really, I don't think about the markets. At night I had a monster position on here, and I'd made some money that day. And while I was watching TV with my wife, I said, I have a feeling that Beyond Meat's going to be up like $30 tomorrow. And that's exactly what happened. So it just, I guess my experience, my knowledge, and it's just, there's a certain way and a cadence the way the markets work. And if something starts going or getting disconnected or out of whack or out of sync, then I have, an antenna to go the other way. But to me, again, it's all about a risk reward. Whether I was right or wrong, I was buying right there, and that was my risk. So I had this much risk for that much upside. So it's all about finding areas of a play where the risk reward is in your favor. Look at this little inside day bar here. So once you see something turning, you could have just put a sell stop underneath there, a stop loss there. That was your risk, and you could still be in this trade. So this is how I use price patterns as a weapon to take advantage of moves like this. So you guys are asking about options. Options are very expensive, very risky, and you can lose everything that you put up. So I bet on these put options for tomorrow. This market's already going against me, and I could lose everything I put in the middle if the market doesn't go down. So, options are, for, it's all about timing. So I've watched a monster amount of, I bought some like puts and Beyond Meat, and they all expired worthless on me. And then the next week it went down $20. So it's all about, timing something exactly right. And I tend to go very short term out, because the more time you go out, the more, you have to pay, the more expensive it gets, and you lose that leverage. So Baron, I got out of my BABA calls today. I was making money, and when they turned on me, I just got out. So Arnie's asking about the IWM. I think in one of my Sunday letters a couple of weeks ago, I warned of this, bull trap in the IWM. This is the small caps. And so you can see that the IWM was in this channel for about a year. And then it broke out above here. But when it starts to re-enter, I start saying this is a bull trap, that it's likely to go the other way. And that's exactly what it did. And now we're, obviously trading right on, this area. But I think by virtue of how many times it's hit this area, I do think it feels like it wants to go back down through here. So, but you were trapped up here if you chased those highs. So that was like kind of the opposite of the BYND, where it went one direction, people get caught, and then it goes very quickly the other direction. You can see how quickly this dropped from 244, down to 215. Pretty big move in 3-4 days, 3-4 weeks actually. And that's what happens when you get trapped, where it gets above a previous level, chases it, and then comes back in. Actually, Netflix looks like it's maybe setting up for a bit of a trap. So Netflix has been, I played this breakout. I made a lot of money on the breakout, but it looks like it's about ready to re-enter the neighborhood of this breakout, setting up for what could be a giant bull trap up here. So if you chase this, now you could be sucking wind as it goes the other way. So it looks like, you've got the start of something that could translate to, a big sell-off here and turn into a trap. The other stock I'm really curious to see how this is going to work out is Amazon, where we kind of went in, out, and now we're sitting at a pretty perilous moment of inflection, a moment of truth. Hey, this is AMZN. It's still in an uptrend. It's still got higher lows, and it's going to be interesting to see what it does here. So what I do is I just set up my structure where this looks like a top. We won't know it's a top until it really kind of comes through these lows. So you could still, it could still carry on, but if it comes back here, this whole thing could be also a double top bull trap, where, you snuck above these highs, and now you're kind of just, so you're really at an inflection point. It still looks like, it's got a bottom here. And so I just draw these structures, and then I watch where price goes and look to hop on board, something that's going to move from one direction to the other. So if this starts breaking out it's likely to break out for quite a while because this thing is just a huge pent up consolidation. So if this starts going up, it's gonna go up huge. Conversely, if it starts taking out this level, it's likely to have a nice drop. So I just keep an eye on these things. I draw my structure. Warren says, I know you took a short on the Dow. What signals would you look out? So yesterday I did go short the Dow. Today I went short the Qs. I took my profits yesterday on the Dow, and actually the Dow is stronger than the Qs. So I was very lucky yesterday. I kind of caught it right on the turn. I got up very quickly near the support and I'm out. So the Dow, you can see, closed on the high and the NASDAQ closed on the low. And this is this rotation that's been going on. Since the Fed is likely to, raise rates, it's going to hurt growth stocks. And so there's, people are getting into the value section of the market and getting out of growth stocks. So you get this rotation every day. But, I think you need to be careful of the Dow. I see this, this top right here. Now we've come right back to the neckline. And, this is still the path of least resistance is higher. But, there's an area of, so that, the indexes, look, the indexes have been a masking effect. If you look at the QQQs, they're what, a couple percent off their all-time high. They're right at, this was the all-time high, and they're right there. 408 was the high, we're at 393, we're right at the high. So if you look at this thing, you'd think, well, it's been fantastic. The NASDAQ stocks have been great. But, look at Peloton, 170 to 40, Beyond Meat, 200 to 40, Zoom, 588 to 180. There's been an absolute carnage under the hood. So this index is really propped up by a couple of huge market cap. Apple making new highs, Microsoft, new highs, Google. So these indexes, the NASDAQ 100, 50% of the index are comprised by 6 stocks. So this does not tell you a story. So, I've not been, if I want to short something, I've been shorting individual stocks like Peloton or Zoom, like Beyond Meat, Roku, DocuSign, what have you. I've been shorting the individual stocks. The NASDAQ has been going higher. So that it's like a tale of two cities, a tale of two markets here. So the NASDAQ's going higher, but it gives you no appreciation for the actual carnage. This is Zoom, topped out at 588. Now, more than 50% lower. Beyond Meat went to 200, now 70. Peloton went to 170, now 40. And looking like it's going to go lower. DocuSign, 300, now 150. Roku. So you can see the indexes have been going one way, but under the hood, there's been just absolute carnage. Where Roku was 590, now it's 230. So you've had 50, 60, 70, 80% haircuts in these stocks, and they still look like they're going to go much lower at the same time that the indexes are going higher. So it's, it's two different things going on here. Darius says, on the daily chart, how did you know on the intraday that it's going down made you quit? So Darius, what I do is first off, my expectation was that first off, when I look at this BABA chart, it's very, very negative. I mean, I don't know really what I was thinking. Sometimes you just get these big counter trend moves, but basically this thing, looks horrible. It's had this huge double top, and then it had another top here. But, things do have these spikes, and I was just looking to, take advantage of it if it occurred. And so today, my expectation, I start thinking about my trades, and I have a certain expectation based on the way this setup, that if this was, a bit of a reversal yesterday, then frankly, I made the mistake of buying calls intraday. And this is a mistake. I always say you should wait for the close, because this actually settled back from the close. And it looked very different from when I was buying the calls when it was right up there. And at that time, it looked like a much stronger potential reversal, in which case it was going to set up for this. So it was really an error all the way across on this trade. And I deserved what I got. But be that as it may, so this is how I look at my trades. If you're saying, okay, this is a bit of a key reversal in the direction of the trend, I was hoping this morning that if I was right, this thing should open, it should actually gap up and go. And then I was quite, I knew I was on the wrong thing, because this actually opened about $1.50 lower and then started going higher. But what I do is I watch the interplay between the unchanged level. So then once this thing starts going back up, so what I mean is I watch the unchanged, yesterday's close. So if it starts going up and then curling back down, then it just sets up for a key reversal. And that's when I got out. First off, I knew it didn't have enough momentum. So I bought the calls, up here. I really needed a move for me to make money on this thing. And I could see from, the outset that it opened lower and then it was kind of going higher. It was fighting this high. And then once it was going like this, then I, just called it a day. I packed it in. It was a tricky play. Typically when I look for a bottom, I don't look for just one bottom. This was really the problem with Tesla this week, was that it made this low off one bottom and it can't sustain. So even if there is a bottom, I'm looking for more of a foundation. Yesterday somebody said, well, how do you decide to exit the trades? I exit the trades the same way I get in, where I see, an opposite pattern, where now you've got a double bottom. Now, now you could see your way to, a rally. It was really just kind of a real flyer to think that this thing was going to, and once I saw that it wasn't going to happen, then I just get out. And so I just look at the interplay between the relationship between the bars. So right here, I was long Tesla this week. It was a reversal here and I started getting long, and then it made a new high that day, and then it made a new high. You can see it opened higher there. And I was long, you can see it opened, but then it started, going back through that unchanged. And I go, that could be a reversal. So I got out of my longs right here and I decided to get short at 11.50. And that's what, put me into a nice, so, it's, I have these ideas, and then the market should confirm what I think it should do. So this is a bear pattern. And if all of a sudden this starts kind of going this way, then, that's not going to look right to me. So there's certain expectations of how these charts should play out. If this is a bear pattern, it should continue to kind of grind within this triangle here. And so I expect it to kind of maybe do this. And that's what my expectation is. But, if we do this and now all of a sudden we're up there again, then that's not going to conform. And, I will just buy something because it didn't do this. So I think I'm getting way into too many subtleties, and it really just comes down to trusting the pattern. Seeing these very simple patterns. So here is a double top. And, all this really did was come back to, it broke out, came back to retest it, and now it's going back in the direction indicated by the top. And so this is what you need to have direct you in this trade. The pattern tells you how it gets there. There's all kinds of you get a $70 move higher, and then you go, and then and it will, the distraction but this is what you should focus on, and this will give you the direction. Eve says, what do you get into? I took the BABA trade. So, going into tomorrow, I'm short the Qs, these proxies on the NASDAQ. There will be a CPI report tomorrow. So it's going to be rock and roll one way or another. I think, we should get some more continuation to the downside. I'm short Tesla. I'm short Marathon. And basically you can be short the board. These stocks that have been going higher, for the last week or so. This was DocuSign. You can see it came off $100 after earnings. Today, you had a nice key reversal. So you can see for the last 4 or 5 days, you go sideways, you don't know when to hop on the trade, and then you let the market tell you when it's time to get back on the horse again. So, this is huge. This had a huge double top here, came off, broke. It's obviously in a downtrend now. Now you just want to know how to join this trade and what your risk is. So, in the last couple of days, there was no way to understand that. And then I just wait for a day when then the market speaks to me and says, okay, this is how you join this trade. You basically put a sell stop under low here, put your risk there. That's your risk and that's your reward. So now you're in control of your entry. You understand where your risk is. And how this gets to where it's going to go, who knows? It could go up, down, it could take weeks, it could take what, but to my mind, that's where you understand where your risk is. And trading, to me, is about understanding risk. If you can understand where your risk is, then the rest will take care of it. So DF on YouTube says, can you check gold? I will. So Nugget says, I think Kathy Wood needs to learn lessons from you. She just imagined Elon Musk as God. So I think Kathy Wood is a fraud. I've said it. She runs this ETF called the ARK Fund. I think she's a pump and dump artist. She was right because, the market was going up, and anybody can look good in an up market. So all during this thing, everybody thought she's a genius. But I think that she is leading a lot of young people down the wrong path. And she is frightening, this woman, because she sounds very convincing. But so this is the ARK ETF. I'm just trying to peel out to this whole thing looks down for a year. So again, the pattern is your friend, right? And there was a pattern all the way back here. You had a double top, head and shoulders right there with a down sloping neckline, which told you that this thing was over right there. So there's your cheat sheet. So during all of these up moves, it's crap, that you just sell into it. And so, along the way, you had another head and shoulders here. And then today you had another entry revealed. So Tesla is one of her big holdings in this ETF, and there's a whole bunch of other garbage. Made a new high, closing the low, and this thing's just, going to go back down. So now you understand where your risk is, so any up move or what have you, just sell into that and look for a move lower. But yeah, I think she's a fraud. And when the stock was 124, I said she was a fraud. And I said, if it goes to 150, I'll send you an apology letter, but I think it's going to 70 before it's going to 150. And I said that right there. So I think that this thing still goes a lot lower. I will look at gold and then I'll end it there. So I am short gold. I think gold is, looking like it's going to set up for an exciting move next year, and probably counter to the way most people, or what most people are expecting. So we looked at gold yesterday within the cadence of this very large ascending broadening triangle. I showed you this triangle on the pound yen. I'm sorry, the pound versus Australian dollar, where it came crashing down. I'll kind of show you that again, just to show you. So you can see that, we have been bouncing off this support line. Now, we very well could come here and it could do that. It could. I don't think it will. So by and large, these ascending broadening price patterns are bearish in implication. So an ascending broadening price pattern is a pattern where prices go up throughout the pattern. They start out life in the pattern narrow and widen or broaden out at the top. So it's called an ascending broadening price pattern. And so this is typically a reversal price pattern. So in that the market was going higher, this indicates a reversal once it comes out of here. And, now I'm just looking for the market to confirm it. It pretty much has, every time it bumps up here, it fails. You can see that every time it has these rallies, every high is less than the last. So it's kind of been the stealth bear market for a year. And now with higher interest rates on the horizon, I can well imagine that we're going to, come out of here much lower. So the thing about these things is that if this does start coming out of here, we know where this is going to end up, and that's really at the beginning of the pattern. So this could drop all the way to $1,200. And I'm kind of anticipating that based on the look of this pattern. So just if we look at history, there it is. This is the pound versus Australian dollar. And again, it doesn't matter what you're trading. And this is, a great example of that these patterns repeat on any and all kinds of instruments. So you can see right here, we had this ascending broadening price pattern in the pound versus Australian dollar on the daily, weekly, and monthly timeframes. And so once it broke here and closed under there, we kind of knew what was going to happen, and that it was going to come right back to where it began. So when it was busting here, I said, this is going back to 175, and it went to 174. So, this is, history does repeat. So this is what we could be in for gold. So I'm short, and I'm going to continue building positions. So there is, there has been a short signal. I gave a short signal on one of my weekly. Here you can see my weekly on November 29th. I said short gold at 1777. So you should be short gold at 17, and it's right there right now. It's about 1775. It's in fact right there. So you can still get short. All right, guys, before you run, I would really like, a favor from you, if you would, and I know you're asked to give reviews all the time, but I put in some time with you guys. I would really like to hear some feedback, good, bad, or indifferent. It really helps me understand if I got things across. Sean said, this is mind-changing, simple explanation of the charts. Awesome week. Grateful for your mentoring. Thanks, Sean. That was great. If you could just put that in the link that I just posted, Sean, you could just cut and paste that. I would really be grateful for you. Thanks, Henry. Henry's been a member for a long time. Thanks for that. So yeah, if you guys wouldn't mind just posting that review, here is, you can say I had a bad experience, tell me why. You had a good experience and tell me why. And I would really appreciate that. And then if you guys, I don't know if you were on the session yesterday, if you want to, buy my book, it's a pay what you want. You can, pay $1, $5, $100. You determine, what you want to nominate. And this will, discuss in detail my price pattern, the 5 steps that I use to, kind of evaluate a trade and set up a trade. And so I'll also stick this link in the chat box, and I'll also stick it up on YouTube. I don't know where I put my YouTube link. Dwight, could you put these links in YouTube?
Yeah, sure thing.
Okay. Yana says, didn't you also create a course? Yes, we have a course. So if you have any questions about what we do, just send a message to support@thepatterntrader.com. And you'll get a message about our elite program. Again, this is where, I send out my trades, every day. This was a trade in, so this is an example of what you would receive as a member of the elite. Every day I send you a picture of what I'm looking at on the charts, the trade itself with the setup, where to sell it, where to put your stop loss, take profit, what your risk on the trade, should be. And then I kind of discuss what I'm looking at on the chart. So the whole idea is to, enable you to make decisions for yourself, not rely on anybody, not rely on the only thing is that's right. The market is always right. Everybody else, they could be from Goldman Sachs. They could get paid $1 million a year, and they're usually wrong. The only thing that's always right is the market. So all I put my trust in, my faith in, and my eyes on is the market. And I look for the market to tell me how to get in, how to get out. And so if you're interested in our elite program, you'll get a message from our team, and then somebody will actually talk with you before you're able to even sign up. So Pedro, the cost and everything you can discuss it with our team. Thanks, Rafael. I'm glad I was able to give you a new way of thinking. So Vincent is asking, I'm still not getting when to get in and when to get out of a trade. So every trade is different. It's a hard discussion because every trade is different. Sometimes I look for shorter trades based on shorter time frames. Sometimes there's a big pattern that emerges and tells you that there's a more immediate opportunity that you can stay in that trade for quite some time. So every trade is different, and then the trade will give me a look as to when to get out. And so again, I give you take profits, and then I tell you how to manage your trades. I have the stop loss, the take profit. You can see that I was in BYMD and had monster open profits on these trades. Got in at 99, and last week it was trading at 65. Gotten at Biogen at 257, trading at 230. So I will stay in these trades if they continue to work. You can see I was short gold, 1777, and that was in November 29th, almost a week ago. And I'll just stay in this trade for a while if, there's no indication that I should get out. So every trade is different. And if you're interested in the elite program, I tell you how to manage those trades. Warren, the emails for the elites come out every single day. So I still have to now write my email for today. All right, Omar, thanks. Thank you very much. All right, guys, have a great weekend. And Son, thank you for those comments. If you could post that on the review, I would really appreciate it. Mala, thank you. All right, guys, have a great weekend. Thanks, Dwight.
No problem, Mark. Bye.